Hello and welcome. In the next few minutes, I'm going to show you when we are likely to see the next house price boom and house price crash. And no, the crash is not 2020 to 2023 as is being predicted by so many. My name is Dr. Cookie Hundle. I'm a real estate investor, doctor and entrepreneur, and I've created this special report to offer some insights into the current situation in 2020 and 2021 during the economic slowdown in relation to how it might affect house prices over the next year and beyond. So the message contained within is urgent because there's lots of confusion out there and there's lots of misinformation as to what's going on in the economy in relation to real estate. What I'd like to do here is try to draw a picture for you of how I see the economic future this next decade and give you 5 reasons why it is hugely unlikely that we will see a land and therefore house price crash as we did in 2008 to 2011. This is very important for you because there are dozens of experts forecasting a serious crash in house prices. Therefore, watch this video before you make up your mind. We've had a global pandemic in 2020 and a forced economic shutdown, followed by a gentle refiring up of the major economies. So naturally, there's been a lot of fear and uncertainty in the real estate market as to what might prevail. My forecast as of now, in May 2020, is as follows. We are going to see a huge boom in real estate values by the mid-2020s. And this is going to be followed by an almighty bust and a housing depression that will lead us into around 2030. Some will say that it's impossible to forecast the economic cycle and the real estate cycle, a bit like this impossible triangle here on the right hand side. They say it's preposterous to make such a claim or forecast, especially so many years in advance. We are indeed in unprecedented times, in a pandemic around the globe, and there has been economic shutdown, certainly in most of Europe and the United States. We've got central banks forecasting deep recessions, and we've even got billionaires and their companies asking for government support. So is it going to be Armageddon? Or am I just some crazy nutcase making baseless forecasts? The question on everybody's mind is what happens next. There's a lot of fear and uncertainty out there. Investors are thinking, should I exit the market? Should I wait and sit it out? Or should I be buying and investing right now? And people are worried about their jobs. Are they still going to have jobs in the coming months? And their businesses, are they going to be able to go back to business? And are we actually going to return to normality? So there's a lot of uncertainty for sure. But very few people are looking beyond the next 12 months or so when it comes to real estate markets. Ask yourself this question. What if you already understood what is most likely to happen to house prices and when? Would you then possibly be a bit more confident about how you choose to invest now? So that's a question. What happens next? Are we going to see this boom that I'm talking about, or are we going to see a bust instead? Now, in order to be able to understand how to predict the booms and busts with reasonable accuracy, we need 3 things. The first thing you need is to really understand the 18-year real estate cycle. The second thing is you need to know about land price economics and the indicators which help us track it. And you also need to understand other global economic cycles. You need all 3 of those to be able to make a reasonably accurate forecast. So for the purpose of this presentation, we haven't got time for everything there, of course. We're just going to focus on the 18-year real estate cycle because this is really quite important. Here's what we're going to cover. We're going to look at the 18-year real estate cycle in land prices. This cycle is based on real research and hard data. We're going to look at some historical land cycles and we're going to ask the question, can we see history repeat yet again now? I'm going to give you some key dates for us to look out for and then at the finish with what you can do in order to take advantage of the situation or protect yourself in due course. So let's take a look at the 18-year real estate cycle. The chart here is adapted from various charts from Fred Harrison and Akhil Patel. On the y-axis, we've got house prices, which is a proxy of land price, and on the x-axis, we've got time. And as you can see, we've got 3 time periods, 7 years, 7 years and 4 years, making that 18 years in total. And so this is a general scheme of how land price works. From the end of the last bust, we have about 7 years of increasing land prices. Then we have a slowdown around the middle. There can be an economic recession here, but certainly a slowdown in the economy. Land price may stay stable, and then there's another upswing for another 7 years approximately, before there's a sharp downturn and then a reduction in land price, a credit-induced bust, which takes about 4 years to complete before the next cycle begins. And there are 3 key parts of the cycle which are important to understand. There's the mid-cycle slowdown, which can be very difficult to navigate. There's the peak, the top of the cycle. And then there's also the land bust, which is credit-induced, whereby there's a large correction in land price values, and then there's a completion of that, moving into the next real estate cycle. So there are key points in the cycle that we need to be able to identify when these occur. If we look at this in a bit more detail, we can see 4 phases. 2 expansion phases with land prices increasing, and we've got 2 recessions or downturns, one minor one at the mid-cycle point and a more major one at the credit-induced land bust at the end of the cycle. If we put some dates from the end of the last recession, we are now here at this juncture in 2020. We're at the mid-cycle slowdown point. And so we're going to move on from here and then see a peak over here, which is going to be somewhere around the mid-2020s. So we'll actually be likely to see a very big increase in house prices that will start around 2021 going into 2022. We'll move up to that peak and then we'll see a few years coming down, and that will take us to around the 2030 period. So this is 2020 all the way to 2030. This is what we're going to see between now and then. Now, I want to go on and give you 5 reasons why I think we will not see another 2008-like land slump that many of the forecasters out there are saying that we are going to experience in 2020 going into 2021. The first thing is this: in order for us to see a land bust, we must first have a land boom. This is the bit I'm talking about, this steep section here. This has to happen before we see the major downturn. So ask yourself this question: have we had 2 years of frantic speculation, house prices soaring through the roof in 2017 going into 2019? Have we seen that? Just like we did in 2005 going into 2007. The answer is no, we haven't seen that. Because we haven't had that boom, we can't have a housing slump. That's the first thing. It's never happened in history, and it's not going to happen now. The second thing that a lot of people are commentating on is the stock market panic that we've seen. Is the 2020 panic a sign of an impending land slump? We've seen a huge reduction in the Dow Jones index. We saw an 11,000 points drop back in February going into March. So let's take a look at that. This is the Dow Jones index. This is a chart, and here you can see around 12th of February it was up around 29,000, and by the 23rd of March, when it bottomed, it was eventually somewhere around 11,000 points down. So what a lot of commentators are saying is that because it's such a big drop, and it's the single biggest drop of the Dow Jones in history, that this is a signpost to terrible times ahead over the next 3 or 4 years. So let's look at the chart on a longer timescale. So this is the chart that shows the Dow Jones index all the way from 2008 until 2020. And this sharp drop here is what we've just seen. We've seen a top there in February, and we've seen a relatively strong rebound here taking us into May. If we look back all the way to the previous recession, the top was here in 2007, and the stock market panic occurred in the second half of 2008, September 2008. That's when we saw a huge reduction in the index. People are comparing this drop in 2008 to this drop here in 2020 and saying, well, it's because we've had a severe drop in the index in 2020, we're actually going to see several years of the market coming down, and therefore we're going to have a horrible housing slump. Let's go back a bit further and look at the chart around the time of the dot-com bubble bursting. That's 2000 into 2001. At that time, we had a high in the stock market towards the end of 1999. And then we saw the market come down over a period of a year and a half or so, all the way to September 2002. So that's what we saw there. Then the market recovered. So we did see a reduction in the market value over that period, which coincided with the mid-cycle slowdown of 2000 to 2001. That stock market correction there, that took us into the next land price boom. You can see it very nicely in the chart. So that gives you a picture of what it was like back then in 2000 to 2001. It was a mid-cycle point in our 18-year real estate cycle. The UK and Canada actually avoided going into recession. The US did go into recession, but what happened at that time is that we did not see a land price slump. Even though we saw this big reduction in the stock markets in that period from December 1999 all the way down into 2002, the land price did not go down to any significant degree. House prices did not slump. In the UK, they carried on going upwards. So at this point in time in 2020, the DNA of the stock market changes is much more consistent with that of 2001 into 2 rather than 2008 going into 2009. And we can see that very clearly in the chart. The third reason is, if we look at the economic data that was coming out at the tail end of 2019, it showed us that the economy was slowing both in the US and in Europe. And this is before the pandemic. This is before coronavirus. Look at these headlines. The economists in 2019 saw the Trump economy slowing drastically next year before a possible recession in 2020. That's November 2018. And the Forbes article on the right is even earlier. The US is slowing down and there's nothing Trump or the Fed can do. That's in September 2019. Clearly, the data was showing that our economies were slowing down, and that's consistent with where we are in the cycle. In the mid-cycle slowdown period, this is what was expected. So what we're seeing now is obviously an acceleration of that with the pandemic, but an economic slowdown was going to happen in any case, or it certainly looked like it was. So reason 4 is, as a result of the economic shutdown, we've had absolutely huge central bank support. There are trillions and trillions of dollars and pounds going into the world economies. And when this happens, what this means is that an economic collapse is less likely. Yes, it may be several months before everything is gradually brought back to life, but there is not likely to be a total, utter economic collapse in light of the huge central bank support. And the fifth reason that we're not going to see a land slump is that we haven't seen a major contraction of bank credit. At that point in the cycle, when we see that 3 to 4 year land price slump, we see a huge contraction of credit. The banks actually stop lending, and those severe land and house price slumps are actually credit-led. Right now, in 2020, we've not seen a withdrawal of credit from the market. It may have tightened a bit, but it's not been withdrawn. In fact, the Fed changed the rules back in March 2020 for bank reserves that actually facilitated credit by reducing their reserve ratios down to 0. So they can actually lend more now than they could before the pandemic. So this is a setup for the second half of the cycle and the huge boom that is coming. So now let's ask another question. Does the real estate cycle repeat? Typically, the cycle takes about 18 to 20 years. We see house prices go up, and then we see the correction, and then prices go up again. And so this is the pattern. So let's look at some history. This is some data that I've borrowed from Philip Anderson. What the data shows is that since 1800, the 18-year cycle has been remarkably consistent. We have 1800 to 19, 1819 to 37, 1837 to 57, where it was 20 years. There's a shortest cycle, 1857 to 73, around 16 years. Then 73 into 1893, 1893 to 1914, which is the longest cycle. 1914 to 1932, which was interrupted by the First World War. Then we have the Second World War in 1939, which interrupted things in a more major way, and things got back to normal around 1955. So the next land cycle was 1955 into 74, and the most recent one, 1992 into 2012. So what you can see is that we've had a very consistent pattern. So the forecast that I'm suggesting here is 2012 to 2030 as our current land cycle. And this is what we're in the midst of now at the mid-cycle point in 2020. There's never been a mid-cycle land bust before, and that's regardless of whether we were in inflationary times or deflationary times. And so why now would it happen in 2020 or 2021? Most of the arguments are that we are in an unprecedented situation, which is a buzzword, of course, at this moment. And we've got this global pandemic, and this is going to lead to economic damage. Of course, no doubt it will. Okay, we've never had a shutdown before, but if we hadn't had a forced shutdown, we'd have seen a slowing economy in any case, and we might well have seen a recession too. The pandemic has accelerated and amplified things considerably. There's also a lot of fear. There's fear about the virus, which is a SARS-CoV-2 virus, and the disease that it causes, which is COVID-19. There are fears about house prices crashing. Some people are fearing that we're going to see the deepest and longest recession ever in history, which is a pessimistic viewpoint and understandable. You can't blame anyone for thinking that this might be a possibility given what the media messaging has been. But let's just ask, have we kind of been in a similar sort of situation before? Let's go back to the pandemic from 1918 to 1920, the so-called Spanish flu. This wiped out nearly 50 million people globally. And prior to that, and overlapping, we had World War I from 1914 to 1919, a long, terrible, crushing war. So you'd have imagined that after all of this, across the globe, there would have been some very difficult years ahead after these two huge, horrible events. And then, from 1921 to 1929, we saw the greatest economic boom in history to that point in time. So do you believe that that cannot happen again with our truly global economic production? Now in 2020, are we not set up for a major boom? The answer is yes, we are indeed. In fact, the setup is quite amazing. So looking through a clearer lens, with knowledge about the 18-year cycle and the way the markets move, what are we going to see next? We're not going to see that 3 to 4 year land slump that is being predicted. It's simply not going to materialize. 2021 onwards, we're going to see an economic boom, and it's going to be huge. We're going to see the largest global wealth creation in history, and there are other macroeconomic reasons for that, which we're not going to go into here. And as a result of this economic boom around the globe, we're going to see an absolutely enormous land boom, and that's going to translate into house price booms. It's going to make the last boom look quite small. So what can you do about it? Well, firstly, you can just ignore it. You can just carry on what you were doing and take your chances and don't worry about it. Don't even think about it. That's the real estate cycle. Take your cues from the media and those around you, your mentor, your guru. Or you can choose to time your investments to take advantage of the cycle. Whatever you're doing, whether you're investing in stock markets or investing in the real estate market, the real estate cycle has an impact. If you can time things correctly, not only can you generate more profit, but you can also use that information to protect your wealth. Because a lot of people get completely wiped out in the busts. The money that they create during the boom gets obliterated during the bust because they make the wrong decisions at the wrong time. So you can use the information of the real estate cycle to create a winning strategy for yourself. You can harness that knowledge about the cycle to your advantage. What can it mean to be able to forecast the booms and busts with accuracy? Well, in 2 words, it means security and freedom. This could be a whole host of things. anything from early retirement to becoming debt-free. You could send your children to university or college, help them get onto the housing ladder, purchase your own dream home, maybe travel around the world, or go into real estate or investing on a full-time basis. All of this is possible regardless of your chosen area of investing. If you can just time the cycle and get it right, the world is literally your oyster. Your time will belong to you. Everything you need to know about the real estate cycle and much, much more I've put together in my 8-week program, the Boom Bust Insider 2020 Forecast. So what the 2020 Forecast program does, it takes you from a position on the left here, when you have uncertainty about the cycle, you may have fear of the real estate and the stock markets, you may not have a clear investing strategy, and you almost certainly get influenced by the opinions of investors around you, gurus, and also the media. And as a result of this, you may miss out on potential profits, and you may risk losing out in the crash which is ahead of us. What the program does, it takes you over to the blue circle on the right. At the end of the program, you have the certainty you need about how the cycle works, when those timings will be, so that you can adjust your strategy accordingly. You'll know how markets move, you will have a very clear investing strategy, and you just won't be fazed by what they're saying in the media or the opinions of those around you, because you yourself have a really deep understanding. This enables you to make more profits on both the upward legs and the downward legs of the cycle. Everything is delivered online, so you can learn from your home or in your office. Here you can see what it looks like. It's a beautiful portal where you can access all of the training in your own time. Also, what you get is this 30-point real estate cycle based investment strategy. Essentially, it's an 18-year plan that works on the timings of the real estate cycle. There are 8 different investor actions and 30 individual key investment points which are important to be able to plan a really powerful, effective investment strategy. This makes sure that you're in the right assets at the right time in the cycle. That is seriously powerful. You also get an ongoing subscription to expert land, economy and stock market analyses, where you get regular updates and insightful observations on what's going on in the markets and what's going on with respect to the real estate cycle and the economics that relate to it. When you layer this information on top of your real estate cycle and economics knowledge, you are in a uniquely powerful position. It's hugely advantageous. This is an ongoing service, so it will continue all the way through this boom and bust decade. So the program effectively becomes your personal guide to walk you through year by year. You can't just take my word for it. You can only make your own cycle-based investment decisions after you really deeply understand the real estate cycle and other economics for yourself. So that's the urgent message that this presentation aims to deliver. If your job or your business or your real estate investing or other investing is impacted by the boom-bust cycle, then what you should be doing is taking action to educate yourself about this extremely important cycle, because the media and the people around you are simply not going to do this for you. So when it comes to that question, what happens next, boom or bust, you will know the answer for yourself. If you learn this information for yourself, you'll never have to take somebody else's word for it. So in order to get onto the program, all you need to do is fix up a one-on-one free strategy session between you and me. This is where we can speak and figure out if this is going to be of value to you. And if we both agree there's a good fit, I'll invite you to join the Boom Bust Insider program and get this incredibly powerful information into your hands. So go below right now and click to apply. Book your one-to-one strategy session with me now. Please don't do nothing. It's just too important. Thank you very much for listening, and I hope to be speaking to you very soon.